It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast, your morning property briefing covering the Australian housing property market from coast to coast. Boy, a lot of property between those two locations, and streaming right now on Spotify and Apple Podcasts with the latest from Townsville to Adelaide. Good morning if you are in either of those two locations. Yes, we've got the market trends, we've got insights and property conversations Australians are actually talking about. Well, I hope you had a great, fantastic weekend. It is a Monday, back into a fresh week, May the 18th. Birthdays, famous ones today. Tina Fey is turning 56. Rick Wakeman is turning 77. And it was on this day that the Sydney Harbour Bridge first carried rail traffic across the harbour in testing phases before it officially opened. There's some information from a time that we have since long forgotten about. Brisbane's real estate. Now, back in the mid-1980s, Brisbane was still considered cheap compared to Sydney and Melbourne. How times have changed, eh? The median Brisbane house price back in 1985 was roughly $68,000 to $75,000, while many apartments could still be bought for under $50,000 in inner city areas. During the late 1980s, Queensland's Sunshine State marketing campaign and lower living costs attracted huge numbers of southerners relocating north. I wonder if we've got anybody listening today that bought a property back in 1985 for $68,000. No, they're not listening to the property podcast show. Why would they? They are bathing in all that money that they have made. Also, coming up, we're going to be this morning giving you a breakdown on premium versus affordable locations in Brisbane. Those two locations are New Farm versus Logan Central. So let's go to Brisbane, catch up with Meighan Wells, the founder of Property Pursuit Advisors. Good morning to you, Meighan. Welcome on to the Real Estate Breakfast. To go back to 1985 and snap up some of those properties. Eh?
To go back there, I have to tell you, I had a bit of a giggle when you mentioned the year. I was in year 5 then, but I do remember my parents paying somewhere in the vicinity of 17 or 18% in interest rates at the time.
Yeah, that's right. I'm one of those people that was paying exactly that sort of money with the interest rates in the 80s. Yes, it may have gone up somewhat at the moment where the interest rates lay, but anybody back then can certainly identify. Now, you've got an interesting story here because you have come from a psychology degree. First question, what made you want to trade that for real estate?
It's funny, isn't it? Because real estate was really not on my radar when I was going through high school. But I now remember that I did, you used to do work experience when you're in high school and you're 10 or 11 or whatever the case may be. I actually did it in a real estate agency, and I'd actually completely forgotten that until this very moment. I went down the psychology path and I was very interested in human behaviour, and particularly groups of humans and how, from a sociological perspective, how they behave. And I think that's when I discovered property, and I'd always had an interest in it because my dad was very interested in property. But when he and I and my mum had a chat and said, look, I'd really like to get into this property thing, it really took me down a very different path. I've been doing a bit of corporate consulting and with a HR degree and an MBA, but the property side of it I found was really interesting because it's not just about the product, which is the bricks and mortar. It's about the behaviour of the buyers and the sellers and all the other parties that are involved, and how those things can come together in a positive way in a lot of circumstances during a negotiation.
Yeah, human behaviour and dads. I have spoken to hundreds, thousands of people since we have been operating the podcast, and the amount of women that have told me that their dads were very influential on getting into real estate. Some of them, they had dads that were running real estate companies who were principals and then, of course, naturally take over the business. Question for you, though. Do you think the emotional side probably matters today today just as much as interest rates and borrowing power because people are scared of making the wrong move in this market.
Yeah, and I think emotion has always come into it because we do consult our parents and we do consult our colleagues, lots of water cooler chat. That was very prevalent when I started in my working life in the mid-90s. But now there's so much influence coming from all sorts of different people, and every move you make is very public. And that comes through the social media interactions that you have. So I think there's an even greater fear of judgment, of making a mistake or doing something that somebody else might judge us negatively for, because it is so public and so many people know what you're doing all of the time. There's very little that people don't know about their friends these days. And I think that really opens them up to that feeling of vulnerability and that feeling of, oh, what if I get this wrong? And that's hard. It's a very difficult place to be in when you perhaps haven't got someone to guide you through the process.
Yeah, Brisbane has for a length of time now been talked about as this long-term growth story. I want to ask you, what are you seeing right now that gives you confidence or caution about the next stage of the Brisbane property market?
It's a really interesting time. I've been a buyer's agent for 22 years, and that's working exclusively as a buyer's agent. I sold property for a little while before that, about 15 months before I went into that. But I bought my first property myself in 1998. And as a first-time buyer, I made every mistake when I bought my first house, but I was really quite committed to getting into the market. It's changed so much since that time, but I've seen about 7 market cycles since I've been working in the industry. What I see in Brisbane is there's some really key indicators that tell us when a market is either slowing or speeding up. And those are things like, the number of people at open houses, the speed of offers, how quickly offers are being made, the sense of urgency people have and that fear of missing out. And those things are just starting to, the heat's coming out of them a little bit. Now, I'm not saying that the market's slowing. I'm saying the sense of urgency in Brisbane in some areas is just starting to settle a little bit. And what we might see as a result of that might be some slowing of growth, because growth has been quite remarkable since 2020. Almost say it was October 2020 that things really started to pick up in Brisbane. When days on market are slightly longer, when agents are going from not advertising a price to 2 weeks after it's on the market, if it hasn't sold, it's got a price on it. These are all little indicators that we see in a market that's changing.
We are talking to Meighan. She is there in Brisbane. When we come back, we're going to be talking about this breakdown between premium versus affordability. That is next.
From interest rates rising, a shifting landscape, rentals running hot, clearance rates, a tight rental market, buyer-vendor sentiment. We cover it all every morning from 6 a.m. on the Real Estate Breakfast. Stay ahead of the competition with the latest news, insights and data analysis on the property podcast that keeps you informed.
It is a Real Estate Monday. Nice to have your company for breakfast this morning. Meighan is with me. Now, let's get on to this premium versus affordable suburb. Head-to-head, New Farm. That remains one of Brisbane's prestige suburbs, sitting right on the edge of the CBD with strong riverfront demand, luxury apartments, of course, and tightly held character homes. Median house price approximately $3.6 million. Median unit price currently just over $1 million. House prices, they have jumped around 26% over the past 12 months. Unit prices have risen roughly 19% over the same period. Let's go to Logan Central then for some contrast. That continues to attract first home buyers and investors searching for relatively affordability with South East Queensland. Median house prices approximately in the range of $735,000 to $788,000, and median unit prices approximately between the $455,000 to $470,000 range. Unit values, boy, they have done really well. They've surged more than 22% over the past year. Houses are still selling relatively quickly due to strong demand. Meighan is with me. that is an interesting, fascinating point about New Farm First. Let's talk about that, because it is no longer just competing with Brisbane suburbs. It's competing nationally with prestige pockets in Sydney and Melbourne, which I find that really fascinating.
You make a really good point. New Farm and neighbouring Tenerife, which is a very small suburb, but very elevated and close to the city. So those areas have often been, they're quite unique in that there are still pockets and properties that are, boarding houses that people of very low income live in, and there's a large elderly community. It is a suburb that has gentrified at a much greater rate than some other suburbs have that might have similar kind of medium house price. And I think that's because it has this eclectic mix of people and food and lifestyle, and it is surrounded by the river, which makes it quite unique, but it is landlocked. So there isn't a huge amount of increase in supply unless a property is demolished and a block of units built. Now, that in that suburb is a very hard thing to do. So what makes it incredibly attractive is it is reasonably low density, particularly certain pockets. It has a great lifestyle aspect. It's very close to the city. If you can get in there, generally people don't leave. So it's one of those suburbs that people will really hold on well past when the kids have flown the nest.
Yeah, there's something about New Farm. I mean, having walked around New Farms so many times, there is just something very, very relaxing in that area. Now, let's go to Logan Central, because this does really show just how dramatically the Brisbane ripple effect has changed the South East Queensland corner. What was once considered a very affordable market, as I say, is now pushing towards that 800k median for houses, and the units, they're up there as well. You only have to go back a few years ago. You probably wouldn't have seen this evolving quite to the extent that it has, and you would have had many conversations about people saying, look, I'm off to Logan because of the affordability factor.
You're right. It's an interesting one again, because over the long term, areas that are outside the Brisbane local government area, they do really have that ripple effects. And what I've seen is generally Brisbane has had an increase in interest, particularly from interstate, when the price differential between Sydney and Melbourne and Brisbane has been at its greatest. So that's when people start thinking, I could get a lot more for my money. I might move up there, see what Brisbane's like, or I might start investing in Brisbane. And we get this influx of interest particularly from the southern states. Now, when the market turns again, those outer suburbs are the ones that we often see drop in value the quickest. So Brisbane itself often doesn't drop in value when there's a change in market cycle. It steadies and the growth will lessen, but A-grade property in highly sought after low density suburbs generally will not drop in value. It'll hold its value until the next rise again. But the outer suburbs, the coastal suburbs, Gold Coast, Sunshine Coast, that is where we see this cyclical up and down in prices dropping when that price differential between Sydney and Melbourne is at its smallest. This market, though, has been so very different because people are not leaving Brisbane. So people perhaps would be educated in Brisbane, grow up in Brisbane, and then go and seek higher paying opportunities, Sydney, Melbourne, overseas. So people coming in, there's a lot of money that has come back to Brisbane, expats that have come back with great deposits and good borrowing capacity. New Farm, the one that you mentioned, this is people who are coming back to Brisbane because they lived here before, or they've moved in from interstate or overseas and they've brought with them a great capacity to purchase property.
All right, Meighan, thank you so much for jumping on the podcast this morning on our Monday morning. Enjoy your day, enjoy the week ahead, and talk again soon.
Thanks for having me on.
Remember to follow us on any of the podcast platforms so you never miss a real estate podcast. You can follow us on Apple, Spotify, and Amazon. Know your property with us. We connect you to the best real estate information across Australia. The Real Estate Podcast.